All right, good morning. Okay, the purpose of this video is to basically um, give you the exact process that I take approaching a new trading week. So I'm going to go and look for this week's order blocks from the Swing Trader channel. And as you can see, there are a great many. Okay, now I'm going to keep this simple. Um, Looks like only Chef JPY has a weekly bearish order block. We have quite a few that have the 2-week bearish order block, but because we're so close to the end of the month, this is the 28th, 3 days away from the end of the month, I'm probably going to look at the monthly order blocks um, in order to get my trade set up. Um, I think one of the most important things we can do is to pick 3 different markets, right? 3 different uh, currency pairs or 3 different assets that you're going to trade. It might be gold, it might be USD JPY, it might be GBP JPY, it might be EUR NZD. Um, the point is, you want to pick a a trade setup that you can take advantage of. That's the best setup for you. So in this case, one of the things that's included as far as the best setup is if I know this monthly candle traveled 1,000 pips, then I can assume that if it's going to pull back, it's going to pull back 500 pips. Now, I do see that we have some pullback that's already begun. So if the trade started here and I caught this pullback to my golden zone, I'm looking at 329 pips. To the middle of my golden zone is about 413. So, I've done some pre-work and I like GJ. That will be one of my trade setups, right? So I'm just going to go ahead and redo the analysis that I've done for GJ, right? So if you come here for this monthly candle and you put the Fibonacci on the candle from the top wick to the bottom wick, you get your golden zone, which I clearly have marked, and you mark the 78%. Of course, you can delete the Fibonacci. I'm going to drop down to the 4-hour. Normally, you drop down 2 time frames. Or on the monthly, that means you would drop down to the daily, and you would get your imbalance from this area, right? We don't really see an imbalance in our golden zone on the daily. We see it above the golden zone, right? So, which tells me that if I get in a trade, I can probably take this trade to this imbalance. And you see my position tools on here. So this would be the area that I'm interested in. Now, um, I don't think we should be greedy. So I'm going to go down to the 4-hour. And when I look at the 4-hour, there's a little bit of imbalance from this candle to this candle. So maybe that's an area of a concern, but I personally think that we're going to push up to this area. Now, it might not be a clean push. It might bounce a little bit, but I do believe we'll make it to this area. So this would be the area that I targeted initially, that imbalance that we saw on the daily, and we see it again on the 4-hour. So I will put my position tool here. Now, do I have a chalk? Do I have a push up and a pullback? Yes. If I throw the fib on it, I can see that this pullback came at least to my 62, percent pullback. Now I'm gonna delete this fib and I'm just gonna drop down in time frames, because when you drop down to the 15-minute, maybe it gives you a more clear picture. Now, on this 15-minute, I clearly see a bearish order block, which tells me price is going to push down. I clearly see an imbalance in this range. So this is probably where I can expect for the trade to pick me up, right in this range. Um, you could hug your stop loss here. But in my opinion, this is such a big dealing range that I don't need to be greedy, right? And what do I mean by dealing range? Okay, let's talk about dealing range. So when I'm talking about a dealing range, this monthly order block, right? And I know it doesn't finish them until Wednesday, but this is the range that I'm trying to capture. I'm trying to capture a move within this range. This is the dealing range within this candle. When I drop down to see where price should go, this red area is the bottom of my order block, the bottom of that wick, and this is the top of that red candle wick. I'm just trying to catch a move within that dealing range, right? So price is either going to come down and respect this red area, push up and respect this high area. I'm not trying to get the complete move up, right? We are in a selling market, right? We had that bearish order block. So price is going to push up, is my expectation. And then I can take a short back down. And you see my golden zone area for 6 months down here. Okay, so I expect to see a move like this. And I don't know how long it's going to take. I don't really care. Maybe it takes 2 days to push up. Maybe it takes a week for the price to push all the way up here. Doesn't matter. I'm expecting this move, and then I'm expecting this move. Okay, that's my first pair that I'm interested in. So whatever markup I need to do over here, maybe I click and make that blue, right? Or green. And this is how I know which pair that I'm keeping track of. Now, mentally, all the JPYs look the same. But I know that I don't have to mark every one of them up. But I'm really interested in GJ because it gives me the higher pip count. All right, now I'm looking for a second market. Let me look at GBP CHF because I was following this trade setup from last week. Okay, I don't want to get beside myself. Let me look at this monthly. So I don't know why I have this long tool here. Okay, so for me, it looks like the market has pushed up. We broke these highs. We broke this high. We broke these highs over here. So it looks like the market is pushed up and it needs to pull back. So if I fib this up move from wick, from this wick down here to this wick up here, my pullback, here's my golden zone, here's my 78. That is my dealing range on the monthly chart. So last month we had a bearish order block. Price goes up, takes liquidity, fills imbalance, and now it's selling down. So what are my expectations? My expectations are either price is going to bounce off of these moving averages or it's going to push on through to this area. And I believe that this is an imbalance. I'm just going to move it over so we can see. Yeah, so we have, you see where the top wick of this green candle is? And there's no wick on this candle. So there's an imbalance that price really needs to come back to. This is a big picture, right? So we don't have to be 100% on the money with that, right? So if I look at this over the last 2 weeks, we did not make a bearish order block. So I have to wonder if price is going to push up and then sell, or is it just going to push up, roll over, and give us the move that I think we're going to get, right? Are we going to retrace on this candle and then sell down? I'm of the mindset that we're going to pull back, maybe close this imbalance, and then keep pushing down. okay? And if we do, we're going to push down into this area. So what I'm looking for from this pair, I would just fib this red candle, and I would expect push up, push down to my imbalance here, and then I expect price to keep going up. Whether this happens or not, it's really immaterial. It's just my thought process on what I see from the market. Many times I'll be wrong, but this is why you pick more than one pair, right? Because if you're wrong, you just trade the other pair that you've selected. I'm just going to mark this up. I'm going to put my ray at the 78. Now I'm going to drop down to the 4-hour so I can see if there's any imbalance. And yes, there is. And we can already see where price started coming back up. So it seems to me that this is a high likelihood that this is where price is going to come. It's about 54 pips here. There's imbalance up here. So it could come about 90 pips, could come all the way up here, 110 pips to start selling back down. So if you need to, you can mark this. You can put a path on here, or you can just mark with your tools that you have on here by your expectations. And you can leave it like this if you're a forgetful person, or maybe you do this the first couple of times and you kind of forget what you looked at on the weekend. So once you mark these up, all right, these are the two pair that I'm looking at. And maybe if you don't want to do another GBP, maybe you can do a euro pair or a dollar pair or whatever the case may be. Now, I clearly, if I see this, I know we're going to have a monthly bullish order block. This thing has been going straight up. Yeah, this is a gorgeous trade setup. So when you trade smart money concepts, we always want to pay attention to what the chart needs to accomplish. We have 3 more days left in this candle. So I would expect price to probably run the high, right? Take the liquidity from the top of this market right here. I would probably expect it to push up, take the high, and then start pulling back. I want to fib this green candle because it's a huge candle. This price has traveled quite some ways. Now, if this pushes up, of course, the fib will have to go to the top. But just because it hasn't, I'm going to fib what's in my face right now. I'm going to put my golden zone here. And I'm going to grab me kind of to throw at my 78. And now all I have to do is drop down 2 time frames and see if there's any imbalance here. All right, there's a bullish order block here. There's some trend line liquidity there. And then there's an imbalance right here. Right, then there's a 78 imbalance at 78. So there's probably a high likelihood that whenever this thing does turn around, it'll pull back to one of these areas. All right, if I go to the 4-hour chart, yeah, I don't like the imbalance in this area, but I do like this imbalance. So I can see price coming back to this imbalance. Now, we did say that we wanted to see price run this high. So, you can mark this high up however you want to mark it up. So you can see it on the chart when you drop down. You can put a horizontal ray. I try to mix up what I use because I use my horizontal ray for my 78. So, if you need to label that line, do what you have to do. But I'll put the line there. Now I want to drop to the 4-hour. So as you can see, it would not be out of character to go up and wick this line. If you see a wick and then price closes back below this line on the 4-hour or above, then it's go time. It's time to sell, right? If price goes up here and wicks closes below, you know that it's probably time to start pushing down. And this is another trade setup that would be similar to the GJ trade, because we're going to count the pips from this line, assuming the trade goes up to this line. Look at how many pips that are available on a sell. Just to sell back to your golden zone is 450 pips. If it sells down to this imbalance here, or 617 pips. It sells down past your 78 to this imbalance, 715 pips. A lot of pips are available. So this would be another pair that I am interested in, right? I'm interested in that. So that gives me 3 different pair that I can monitor throughout the week. Now, if I wanted to, I could highlight this line. I could set an alert. Look for shorts, right? Create that alert. Now, when price hits that line, it's going to tell me, okay? I do like some other setups, but it's important that you as a trader pick 2 or 3 and you monitor those 2 or 3. It's better that you monitor those 2 or 3 and miss some other trades than to try to monitor too many and miss out and not be able to execute on the ones that you monitor. You're only gonna trade one of these. You only need one move. Maybe the one move is your EUR NZD, but maybe the move is the GBP JPY. Once you're in that move, you don't need to focus on those other moves. You just need to focus and execute on the one that you selected. So hopefully, you guys understood this. Hopefully, I explained it properly. I know I've been doing it for a while, so mentally, I probably make a lot of assumptions that may not be clear to you guys as people who don't normally trade like this or don't see the markets the same way I do. So I explained to you why I prefer to use the monthly, for this analysis versus the weekly or the 2-week. It's because we're at the end of the month, and I'm looking for this move to happen. This month. I would be remiss if I didn't tell you guys that the Fed meets this week, the Federal Reserve Bank, and they're going to decide whether or not they're going to raise our interest rates. That's going to be a serious market mover. The market is going to be heavily manipulated. So keep in mind that whatever the Fed decides to do with the interest rates, it's a big deal for these markets. And I say all that because if you go to this tool, CME Group tool, this gives you basically the expectations, right? What people think. And basically what this tool is telling you is that 93.8% of the traders think that the Fed is not going to lower the interest rates. Only 6.2% think they will. We'll see how this plays out. But there's another correlation that I want you guys to keep in mind. 90% of traders fail. 90% are wrong. 8% are successful. There's nothing that you'll ever be able to do to change that. So I believe that this 6.2% might have it correct, whereas the 90% of people who don't believe the Fed is going to lower rates are probably going to be off base, right? At the end of the day, these markets are a business. So if 90% of people are hedging against the Fed dropping rates, and 6% of people have their money on the Fed lowering rates, this is the pile of money that the markets will want to liquidate. We will see. Um, we will see. If the Fed lowers the interest rates, it will have massive consequences. We will see the indices go up and the dollar go down. Hopefully, this little talk or lesson or whatever you want to call it helps you this week. Um, let's get in these markets. Let's make this money. And I will drop the signals whenever it's time to get in the trades. All right, y'all have a good one.